America's exploding debt crisis. The ticking time bomb of the global economy if you're an investor. Exploding debt isn't just a concern, it's a looming threat. U.S. debt is skyrocketing. And history shows the music always stops when a major crisis hits. Floating U.S. treasuries. Today, the United States owes over $33 trillion, a staggering amount that exceeds the combined economies of Europe, Africa, and South America. If this wasn't a pressing issue before, it certainly is now. The trillion-dollar question now is, when will the bond market finally break? One of the most powerful tools in China's arsenal, for nearly a century, the U.S. was seen as the bedrock of global economic stability. Allies and adversaries alike trusted the dollar, investing their pension funds, sovereign wealth reserves, and even backing their currencies with U.S. debt. Why? Because everyone believed in one core idea: the U.S. dollar would never fail. But what if that assumption no longer holds true? For nearly 100 years, America played the role of the world's bank. Countries like Japan, China, and the UK poured hundreds of billions into U.S. bonds, earning a modest 2% annually. It's not exciting compared to stocks, but it's safer. Companies go bankrupt. Countries usually don't. Anytime it needed funds, it issued D10 nations lined up to buy it. And U.S. debt, backed by the world's largest economy, was the safest bet. Each year, America must pay over $1 trillion just to service existing obligations, and that S before adding new spending. Now, for the first time in decades, people are asking, can the U.S. actually afford this mountain of debt? But if they lend you $1 million, it's the bank's problem. America's $33 trillion debt. It's now everyone's problem. From safe haven to shaky ground, these moves help stabilize the economy, but at a steep cost. The U.S. added trillions to its tab, and they're not alone. Japan, the UK, Germany, and other close allies are pulling back too. Then came another blow: fresh tariffs that shook global markets, further eroding the image of the U.S. as a stable, predictable economic power. Since 2008, U.S. debt has tripled. Since 2021, China, once the largest holder of U.S. debt, has dumped over $340 billion in U.S. bonds. The result? An eye-watering $5 trillion in new debt, around $15,000 per person, was added in just a few years. Japan followed suit, offloading $200 billion. Even close allies like the UK and Canada began selling. Investors, desperate for safety during global instability, flooded into U.S. bonds, driving rates even lower. Worse still, if international confidence in the dollar faltered, it could spark a mass sell-off, devaluing the currency and triggering runaway inflation. As a result, trillions in debt were just manageable for a time. While the U.S. isn't about to collapse tomorrow, a stumble under the weight of its debt won't just harm Americans, it could devastate the global economy. The dollar's former glory. France and the UK spend under 10%. Greece, infamous for financial chaos, spends just 5%. There was once a time when even questioning the safety of U.S. debt sounded absurd. Why? Because it was a low-risk investment. Governments manage taxpayer money they cannot afford to lose, so safety reigns supreme. But this system hinges on one thing: trust. Flush with oil wealth, the country borrowed heavily. But when oil prices collapsed, so did investor trust. The currency tanked. Inflation soared. People needed bags of cash to buy bread. There's a saying, if the bank lends you $100, it's your problem. If investors stop trusting it, the entire system could crack. Others are shifting to gold, euros, or digital currencies. 2008. The turning point, the 2008 financial crisis, pushed America into its deepest recession in 80 years. The government's response? I spend a lot. First came the $700 billion bank bailout. Then the $831 billion Recovery Act, which funded tax cuts, infrastructure, and direct support to struggling Americans. The U.S. has only run a budget surplus 4 times since the 1980s. Even their ambitious $1 trillion goal would only cover a year of interest. Between 2008 and 2020, the national debt ballooned over 30%, and by 2020, every American effectively owed $80,000 in federal debt. But borrowing was cheap. Interest rates hovered near zero. Yet this strategy was fragile. A mere 1% hike in rates could cost the government an additional $280 billion per year, but this would be economic suicide. The moment investors sense the U.S. is inflating its debt away, they'll flee. The dollar will collapse, inflation will soar, borrowing costs will skyrocket. Then came COVID-19. It reveals deep strategic vulnerabilities. The country relies heavily on foreign powers like China for critical resources, especially rare earth minerals. The pandemic's financial shockwave after a decade of inactivity. They're preparing to reopen one of the largest tungsten mines in U.S. history, located in Idaho. This asset was once the fifth largest tungsten mine in the U.S. and could restore strategic control over a vital resource. To avoid total collapse, the government once again turned to massive spending. Stimulus checks, business bailouts, expanded unemployment benefits, as by the time the dust settled, U.S. debt stood at $31 trillion, surpassing 100% of GDP, a level not seen since World War II. For the first time, investors started to doubt whether America could ever repay what it owes. Or, this could be the wake-up call America needs to rebuild, reform, and restore its standing as the world's financial anchor. Just 1 year after the pandemic, China had slashed a quarter of its U.S. holdings. The U.S. has no active tungsten mines, while China dominates global supply. Recent Chinese export restrictions prove just how fragile this dependence is. While the U.S. has always recovered from past sell-offs, this time feels different. With debt levels this high, confidence is eroding faster than ever. Warning signs, rising interest, and runaway inflation the first red flag. Interest payments are exploding. The U.S. now spends over $3 billion per day just on interest, the highest ever. It's going to get worse. Even more shocking, America's military budget is now smaller than its interest payments. The U.S. spends 18% of its tax revenue on debt service, nearly double the average for developed nations. If confidence in the dollar keeps crumbling, so too will its value, and with it, America's economic foundation. It's a real danger. A currency crisis. U.S. consumers import $4 trillion worth of goods annually: fuel, food, electronics. As the dollar weakens, these essentials get more expensive. Inflation spikes. The economy, once bolstered by cheap credit, becomes incredibly fragile. This scenario may seem extreme, but history offers stark warnings. Look no further than Venezuela. In the early 2000s, it was South America's richest nation. Today, Venezuela is still stuck in hyperinflation, its economy in ruins. Now imagine that same outcome, but with the U.S., the impact on the global financial system would be catastrophic. The dollar's global role at risk. The U.S. dollar isn't just a currency, it's the backbone of global finance. Most world currencies are backed by U.S. dollars. Confidence doesn't collapse overnight, but the signs are clear. Countries are hedging their bets. China is promoting the yuan as a new global reserve. Can the U.S. save itself? There are two main paths forward, and neither is appealing. 1. Cut spending. Reducing the deficit would ease the debt burden. But politically, it's nearly impossible. Voters want more services and lower taxes, not austerity. Even Elon Musk's much-hyped Doge initiative to cut wasteful spending has only saved about $40 billion, just 10 days' worth of interest payments. To make real progress, the government would have to slash entitlements, Social Security, healthcare, defense. But no administration wants to touch these politically toxic programs. 2. Print money. The Federal Reserve can theoretically print its way out of crisis. This would trigger a full-scale financial implosion. A national security crisis to America's debt crisis isn't just about money. Take tungsten, essential for everything from defense tech to aerospace. Efforts are underway to fix that. Trump's Unleashing American Energy executive order marked the first major step toward rebuilding domestic resource independence. Enter American Tungsten Corp. The clock is ticking, whether through spending cuts, strategic reforms, or painful decisions. The U.S. must act fast. The alternative is a debt-driven disaster with global consequences. We may be watching the end of the dollar's reign. One thing is certain. Without serious action, this crisis won't just affect America. It will reshape the world.